Welcome to ShortView Trading, it's your morning market hit for Thursday, August the 20th. What matters today for traders? So risk aversion has hit in global financial markets over the past 12-18 hours. In particular, US markets sold off into the close of their normal trading session yesterday over in the States. That weakness has been picked up in Asia, where markets, some of them are off quite sharply. Korea down over 3% overnight, Taiwan similar, and some weakness in Hong Kong and Japan as well. That weakness has been picked up in Europe as it's washed around the globe, with European equity futures opening lower this morning, down 1.5% across major country equity indices. Now, what's driving that is a real key question. At its heart, it's kind of clear it's dollar strength. And as you can see from the chart in front of you now, the dollar's been rallying over the past 12-18 hours. Now, what's driving that, though, is the real question. There's some discussion that it's to do with the release of the Fed minutes and some pushback from Fed members on yield curve control. In other words, a little softening in their enthusiasm for implementing yield curve control. That's seen as one of the reasons the dollar's been stronger. But if you look at the chart closer, you'll see the release of the Fed minutes, 7 p.m. London time, was actually after the dollar started strengthening yesterday. So it's always difficult to know exactly what's driving these short-term bouts of risk aversion and what's been driving the dollar higher. It may well just be that it's sold off for the prior few trading sessions and therefore nothing too meaningful about it, helped a little bit to the upside by the release of those Fed minutes. More importantly for market participants though in equity markets though is the question of whether or not this is the start of a meaningful pullback or just one of those classic 1 to 3 day wobbles that you often get in the midst of an uptrend in bull markets. There's various charts that are of interest in that respect that we've laid out in today's daily rag, which is available to subscribers on the website. But there's one in particular that I wanted to highlight, which I think is kind of interesting and gives some interesting 1 to 4 week signals in equity markets. That's the chart we're putting up in front of you now. This is the percentage of US stocks that are overbought. We derive this chart by taking just short of 3,000 US stocks and looking at their short-term 14-day RSI signals. And the percentage of them with high RSIs above 70 is the classic number we regard as overbought. That's of course a short-term 1 to 2 week measure. And as you can see, it gives quite timely sell signals and quite timely buy signals. The time not to use it is in major phases of risk aversion, major waves of risk aversion. For example, in March and February, March early this year during the pandemic sell-off, this is a very early indicator to signal buy. This is not the sort of indicator you should look at in those major waves of risk aversion, as I mentioned. But it is a good indicator in normal market conditions when there's not extreme risk aversion at play, which is most of the time. And you can see in early June, it gave a good sell signal when an awful lot of stocks were overbought. There was a wide breadth of stocks that had moved to high levels. You'll remember in the weeks running up to that, we had the cyclical stocks running along with some of the tech stocks. And we had a recent sell signal from this indicator not too long ago, followed primarily really by a bout of consolidation. What's encouraging though is it's now right back close to its buy levels. Over the next day or two, I would expect it to signal buy once again. So given we think we're in a benign uptrend, that'll be an interesting signal from this indicator. For the full details of how we're playing this market, please see today's daily rag available to subscribers via the website. So what are we watching today? Well, it's pretty light once again on the macro calendar. There's weekly jobless claims out of the States. That's always interesting. And following on from the Fed minutes yesterday, we've got the ECB minutes later today. Other than that, it's pretty light. So that's it from us. That's your morning market hit for Thursday, August the 20th. Thank you for listening. Please do subscribe on YouTube. Simply search under ShortView Trading or follow us on Twitter, LinkedIn, and or Facebook. Thank you for listening. Stay safe. Trade well.